And we are live. This is Travis from Carter Cow Capital, helping you fight for your financial freedom throughout the forex market. This is another episode of Trade with Travis, episode 271. Um, Happy Wednesday to each and every one of y'all. Good morning to each and every one of y'all. Sorry for being here a little bit late. Going through some back testing and trying to get ready for school and everything else like that that's going on. No excuse, but typically, obviously, we do this at 6:30, and then after that, get out of here right around 6:55, somewhere around there, so we can be able to go through get everything else situated when it comes down to trading. So I'm super excited to be able to talk to everybody. Let's go ahead and go through the disclaimer, get everything else out the way, and then after that, we'll go ahead and make sure everything is right. And also, if you are watching live, please make sure or help me out here. Let me know if my sound is good. Allows me to be able to ensure that I'm not getting any type of echo for anybody that's basically potentially watching. So here we go. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education. And from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. It also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money uh, today. So as we go through, put everything else together, I want to make sure that obviously we can be able to have everyone here and be present when it comes down to what we do. Um, you ready to show myself onto the screen as well? Let me go ahead and do that so I can make sure everybody can be able to see me. There we go. Good morning, everybody. Hope everybody's doing very well. Just to kind of give you a full disclaimer, what's going on, kind of a fourth wall as we go through. I am back testing and doing some neural network training on um, or testing on one of the systems that I'm going to end up reviewing a little bit later on this week, or hopefully can be able to have out this week as they start season 2 of Expert Advisor Reviews. We end up doing our first one of Expert Advisor Reviews on the Venus EA, and they actually ended up doing pretty well. Now we're going through and just take a look at everything else like that. Casey, what's going on? Long time no see. Hope everything's going well with you. Um, as we go from there. So let's go. FXStreet.com. Let's see what's happening when it comes down to that. Today is a big day. Today is the interest rate decisions. And more importantly, this is where we're talking about what's going to end up happening for the interest rate projections of the first year, second year, current, and then after that, longer, which means that this one is going to end up being a larger, it's going to end up being a very big day when it comes down to this overall movement. So if I'll put it to you like this is the 22nd day of March when it comes down to trading days. It's probably been about 17 to 18 different trading days. If you are up in profit right before this news information comes out, here's my simple and repeatable rule that you can be able to use to be able to save yourself money, because the only thing that we're paying attention to is the Fed decision that's going to end up happening at 2 o'clock today. Number one, wait 15 minutes to be able to see how the market actually moves. Make sure that you stay out of pairs before actually being given to jump in. The next one is a relatively simple. From there is once you end up seeing that overall movement of what's happening throughout the overall day and being able to make a decision on it, after that 15 minutes, if you don't have direction, if you don't have what you're liking when it comes down to the pair, do not take a trade today. Very simply put. This morning, will probably end up being a little bit of fool's gold. They typically there's some type of push that ends up happening in a direction, and then once that push actually ends up stopping and subsiding, the market will slow down and slow down very quickly. So if you're going to end up making trades today, your trade should be anywhere from the 8 o'clock to right around 10 o'clock time. Anything after that, I would not look at being able to take any trades until everything else is finished. When it comes down to the news today, I do expect that we're probably going to end up seeing some. We probably might end up seeing some horizontal movement, which means that the market may end up kind of doing some movement like this. I'm going to put it on the chart real quick. Probably might need to see some big pop down, big pop back up. Market will kind of settle, and then after that, it will truly make its move either to the downside or either to the upside in one of those directions. So, once again, if you are in profit, this is not the day to sit up there and try to play and say, hey, we need to be super aggressive if it's not there. If it is there, then be super aggressive. But if it's not there, then there's no reason to save your money, save your time, save your stress and everything else like that. Move on and try to find the best uh, percentage or probability of being able to win when it comes down to a trade. Typing a Y, yes, if that makes sense. Uh, but I want to make sure that everybody understands that. That's my simple yet repeatable strategy. Wait 15 minutes to be able to see what's happening, or 15 minutes after the news to be able to see what's happening, because this news is going to be spread out from 2 o'clock, probably around from 2 o'clock to 3 o'clock. It's going to catch some people off guard, so there's going to be high volatility. If you're not there and you don't believe in what's happening, then do not take a trade. Okay, there we go. Simple yet and clear. Hopefully, everybody gets that as we go through and put everything else together when it comes down to these pairs. All right, so where else are we at? Here we go. Let's go ahead and get started. Um, United States dollar index, we take a look at it from a weekly perspective. This is what we've been seeing. Overall, the weeklies in the sell zone. The market had pushed up all the way up to 13,556. And if we take a look at this purple trend line, then I'm going to bold up a little bit more. This is the inner trend line that we have been bouncing off of. The first time the market has bounced off this thing a couple times and has proven to be strong when it comes down to movement. This trend has been the same uh, literally since December 20th, when the market actually ended up making this movement from actually dropping and being bearish. So this overall, the trend has been strong, and it has been basically saying that the bulls have been basically moving to the upside from there. We can see it right here, we can see it right there, we can see it right there, we see it here, here, and we fell down just a little bit, then the market actually ended up popping up to the upside from there. Now, based off of that, um, we are basically tapping this overall position again. So this is really put me into a position of to where it's like it's 50-50. The reason why I'm not going to say 50-50, let's say that it's more, in my opinion, it's probably more 60-40. 60-40 that we're probably going to end up seeing a downside movement compared to seeing a upside movement. The reason why I say downside movement is because when we look at the weeklies in the sell zone, that's telling us over time that we're probably looking at the market starting to be able to fall. We have a fractal high, but we finally end up having two candlesticks to the left and two candlesticks to the right above this overall high price right here, in which I'm getting ready to place a little dot at right there. So that's kind of telling me that more than likely we may end up revisiting 12,626 one more time before ultimately trying to see how the market's going to end up moving. But uh, this is a pick 'em today when it comes down to trading, and kind of going from there. We take a look at it from a daily perspective. The daily is basically in the buy zone. So the weeklies in the sell zone and the dailies in the buy zone. That means that we have no time frame alignment. And if we have no time frame alignment, then that means that there's no great trade to be able to take out there. That's why I said there's more 50-50. I like being able to take trades that give us a 70 or 80% chance of being able to win manually compared to being able to have a 50-50 chance. So this may be, once again, this may be one of those situations where I just might say, hey, I'm not interested in being able to trade. Now, yesterday, what we ended up talking about was that I expected for the market to be able to retest from the 2 hour sell zone, and then after that start to be able to break down to the downside. It happened slightly, but quite frankly, if you end up taking that trade, you're really not that much in profit. Uh, mainly because if you end up taking a trade right here, right when the market broke the counter trend line break, you'll probably only be about 60 or 70 something points, which is really not that much when it comes down to the United States dollar just overall. And we can see that the market is starting to push up. I do expect that we're going to see a lot of consolidation today. Geez, what's happening? Oh, okay. Thank you. All right. Um, I do expect a lot of consolidation today, and I do remain kind of solid when I say that. So early trading on the United States dollar in the morning time, I'm not going to do. I'm going to wait until a little bit later on to see how the market reacts. Okay, so done with that one. Oil, we end up hitting profit on oil when the market ended up pushing to the downside yesterday. Then after that, slowly started popping back up. So basically, we had a breakout of this $70 a barrel mark that finally ended up happening since this market has been in consolidation since in November of last year. And now it's finally starting to retrace in this area. Now, based off of that, the question is, what should we do? Should we be looking at buying? Should we be looking at selling? I'm saying the same thing. We know that the United States dollar is going to end up being um, there's going to be a lot of heavy volatility with the United States dollar today. I would not be interested in being able to jump in and kind of make a move on this pair as of yet. Um, because I just want to see how the market's going to end up reacting a little bit later on today. So just keep that in mind. I'm probably not going to end up taking a trade on U.S. based pairs right here at this particular point in time. So you may have to look outside and kind of look at what's happening with euro pairs or pound pairs to be able to kind of make other moves just overall. But like always, if the market ends up breaking out, there will end up being a retest. The market has already retested the first time. It pushed out and then it pushed back up right here. It went back down, and then after that, it's slowly starting to push up again right there. If this market fails again and continues to fall down, and then after that, we have to keep in mind that there could be some consolidation right around that $65 a barrel mark that could happen. If that does happen, then that means that we're truly in consolidation because we've had it to where it's done hit multiple times at 65. If it keeps on moving to the downside, then obviously we have that second take profit that's right around $63 a barrel, I believe, or 64.31, somewhere around there, that we're looking at for it being able to trade to the downside. But if it breaks above $70 a barrel, I don't believe that it's going back. If it breaks above $70 a barrel, then it's going up to 82.50. So and make sure that you end up understanding that you can possibly be able to do a strategy for, which is basically buying at support, placing your stop loss just below the swing low, and then after that, kind of going from there. So this is more of an idea compared to an actual trade at this standpoint when it comes down to that movement. Okay, so oil not doing anything. I want to see how the market kind of reacts a little bit later on today before we jump into that one as well. Take a look at gold. The gold pushed all the way up to $2,000. From there, the market has retraced. We end up making profit off of that one from what was it, 1800 all the way up to 1856. Once the market ended up pushing back up to this position, or push back up to this position, then we can see that there was a little bit of a fight from there. Now, we're going through long-term consolidation. This long-term consolidation has been since 2019. The resistance levels on both of these have been right around that 20,060 number, or that very close to 2,100. The high on this one was 2070. The high on this one was at 2074. We ended up getting above 2,000 when it came down to this number last week. I think that we're just kind of retesting this overall number. We can see from a weekly perspective that we are moving bullish, or there is more momentum bullish when it comes down to this, which kind of plays towards the thought process that I end up having of being able to say that the United States dollar is probably going to end up showing some impending weakness. Now, we take a look at this from a daily perspective. The daily's in the sell zone, so it's doing the exact opposite of what we end up seeing off the United States dollar index, but saying the same story. If you take a look at the United States dollar index, we end up seeing that the United States dollar was showing signs of being short-term bullish but long-term bearish. This is showing signs of being short-term bearish but long-term bullish, which means that it's basically saying that the United States dollar, or there's expected United States dollar weakness based off of the charts. That's not necessarily saying that it's going to end up happening. It just means that that's what I'm looking at. From a daily perspective, we have, or showing, or looked like it was more of an evening star. It wasn't a full evening star candlestick, but we're going off of 2 days ago having an indecision type of move. Today or yesterday had a decision move, and currently right now we're still kind of in this indecision phase. And I do expect that we're going to be in an indecision phase all day until 2 o'clock happens. So gold early morning trading. There's no early morning trading on this one. Just be patient. We finally end up seeing that this market kind of gave us a better understanding about where the fractal would be, or not fractal, where would the counter trend line break would be for the U-turn to the upside. But don't get fooled on this one. Play your cards. Don't get fooled on this one. All right. Hopefully everybody's good when it comes down to that. Bitcoin. I bought some more Bitcoin last night. Let's see. So Bitcoin, we're in that movement from 25,000 to 29. We talked about that. We've been talking about that for a very long time. We end up saying that once it popped past 25,000, it wouldn't be very long until it got up to 29,000. I expect that it will get to 29,000 today. Okay, I'm saying that right now. I do expect that it will get to 29,000 today. If interest rates are somewhat bad and people are afraid to be able to see what's happening with them, see what's happening with the United States dollar, then they're going to start putting money back in Bitcoin and kind of seeing how that's going to end up reacting. Now, the reason why we're saying 29,000 is because if you look at it, 29,000 was the area where we end up having this fast movement and this fast flow early in 2020 when the market really started to pop the first time. When it fell down last year, it ended up having a fast drop from 29,000 to 25 without really much hesitation. And currently, right now, you can see that same fast movement to the upside last week, and now it's just the finishing touches of this movement overall to be able to push up to the upside. If it gets past 29,000, then it's kind of all bets are off when it comes down to this movement. We possibly could see that this market could get back up to at least somewhat of this midpoint or these overall highs right in here. Um, let's go to the body of it real quick on the midpoint of all of these candlesticks. But we could see that the market could get up to this point. Next, if that does happen, we're talking about every bit. Make sure. There we go. That would be right around that 38,000 number, but I think it'll gradually take time to be able to get to that number. But once it breaks past 29, I think it will probably sit at 29 a little bit. Then the next move will be up to 39 if it continues to go bullish. I do expect that it will go bullish today, though. Once again, that's based off United States dollar weakness. We're just looking at that. Then after that, we're going to see what the public does when it comes down to getting into altcoins and everything else. Speaking of altcoins, let's take a look at Ethereum. I think Ethereum will probably give a better answer to what's going on from a weekly perspective. The market has finally ended up breaking the long-term outer trend line. That's in blue. We take a look at it from a daily perspective. The market went into consolidation, fell down, and then after that, finally ended up popping past to the upside on this overall movement as well. We end up having a trade on this one, or a proposed trade. I did not take this trade. At 1,500, where to take profit will end up being right around 1,350. The market ended up going all the way down to a low of 1,370 before ultimately end up popping back up to the upside from there. So as we go through, a couple things. One, the pricing is above this overall high of consolidation that we just had, that we ended up having early in July of last year. The question now overall is where's it going to go? And the only way we can be able to find that out is by placing in some fibs. So let's take a look at it from some daily fibs to the upside, and we kind of get a better answer on what's going on. This was the last support that we end up having right here. I'm going to treat that as the next position. Market ended up retracing all the way down to the 5-0 position from an ABCD perspective. Let me show you what that looks like. They end up looking like this. Here goes your A, here goes your B. The C fell all the way down to here, which means that if we continue trending, the D extension will end up being right around the 1900 level, which would be 1901. We are in a push zone at this particular point. If you don't know what a push zone means, that means that we're above the B in a uptrend, and because we're above the B in an uptrend, that means that that there's more bulls basically buying than there are sellers in this position, and there's a better chance of the market finally going through this final little push to finish out the D extension or finish out finish out the D extension of a ABCD move. That's up at 1910. So if we take a look at that, this overall, to me, that means that we're only looking at buying, which once again kind of goes to the thought process that I end up saying that I believe that the United States dollar is going to be weak today. This one is, I'm not going to say simple, but I would say do this. There goes our support. There goes our resistance. We're in a little minor consolidation from a 2-hour perspective. You'll see it a little bit better from an hourly perspective. You can look at this two ways. First one will end up being this. You're trying to get great value. The best great value play would end up doing this. You'll hope to be able to see that the market would kind of fall down back to that 1715 area, which is right around here, which matches up with that and matches up with this other movement right here, and then start to look at being able to buy. Or if you're being conservative, the next conservative move would end up being okay, wait for the market to be able to break these highs. The high price is at 1820. The high price right there is at 1839. The high price right there is at 1840. So anywhere right around that 1820 area will probably end up being where, obviously, if we go to and take a look at it from trading views perspective. Wrong one. Let's see. Take a look at what's happening with Bitcoin. I mean, Ethereum. I'm pretty sure we're by a low volume node. I'm almost certain about a low volume node. Okay. Everybody, I want you to pay attention to this side right here. Okay, there we go. Here goes our high volume node right here. Here goes our collection of consolidation that I was just talking about. There goes the support that I was just talking about right there. Let me see if these numbers kind of match up. The high of this price was at 1837. So remember, I said 1820, somewhere around there. If we look at the top of this bar price, 1825 will probably end up being the price aggressively if you want to look at being able to buy, and kind of be clear. Now, the VWAP is actually bearish. The orange line, which is a moving average, is actually showing signs of being bullish. That doesn't surprise me being in consolidation. But if we go to a 2 hour and we start kind of zooming out and seeing what we have ahead of us, if we start looking more to the left, we go to a 4 hour. If you notice, we are in a very we're in a very good position. If you're looking at being able to buy, the reason why I say that more than anything else is because we finally cleared out of the pricing that was the heaviest when it came down to this volume, which was right around the 1700 area. So long as the market ended up clearing above 1700, now we're talking about the next area of being able to be able to stay in this overall trade without necessarily having to worry about having any faltering. We end up being up to 2400. The reason why I say 2400 is because that kind of like what we end up looking at before. The high right here is 2550. We end up taking a look at this high volume node right here where the next biggest amount of push is between these two blocks right here. So we got 2.3 million, 1.4, 363, 784. That goes your unfair market pricing. The unfair market pricing goes all the way up to 2400. So if I'm trading this, I'm going from 1700, and I would start looking at being able to take out profit right around that 2400 level until the market gets up to 25. And then after that, I think that's where we'll start seeing consolidation again a little bit more. Now, the question is how long it's going to take uh, the market to be able to get to that point. It doesn't matter. In this case, the reason why it doesn't matter is because we're in a low volume node. And if we're in a low volume node, as soon as we break outside of this consolidation, then I think that we have a very good chance of being able to have a good push to the upside. So, two different thought processes on this trade. And I think I've said it already before, but I actually would be a little bit more excited about this one compared to Bitcoin, if I'm being honest. You get better value off of this one anyway. So Ethereum, I would look at being able to get in right around 1825 um, as a long position. From that 1825 position, my stop loss would be just below this overall swing low in the gap of overall spacing, which would be right around 1775. My take profits on this position, if you're trying to go long term, let's see, if we're trying to go long term, go back to the 4 hour. We're just looking at that large run, that large push to the upside that ended up happening. The first time it stopped right around 2021. So let's see. When we go back in this area, okay, so this is, let's see, make sure that I'm looking at the right spot. Okay, we're playing inside of that gap already. Okay, so pricing is right here. Go back to previous history. US yen, what do you think? I'll take a look at that next. Okay, so going back to what ended up happening last year, right around this time, 1700 to 1864 was the number, right? We can see this large spot that we could be able to take advantage of right there. That was previously. That means to me that that's the unfair. That's the biggest unfair market price. Currently, right now, we are we're getting close to this little blue area right here, where if we break past that area, it'd be 1842 up to the 1900 area, which would be the first move. So 1842 to 1900 would be the first move that I'll look at being able to get out at, just slightly taking profit. Long term moves on this one would go all the way up to, once again, go based off of the full hour and taking a look at what's happening with unfair market prices back up to 2400. I think you can get in at 2400 and feel very comfortable with kind of riding that out if you're just taking that from a long term perspective. Now, most of y'all know inside of this session, I'm more of a swing trader, so this will be a swing trader's move to me. Swing trader or position trader move on that one. You're looking at this scalping go 1842 to 1840 to 1900 or 1825 to 1900. So I'm saying 1825 is the logic point. I think that's when the market is really going to start moving. If we look at it, this is the edge or the ledge of that last movement right there. So 1825 would be the area where I would look at starting to be able to place in buy trades. Yeah. Type in a why yes if you understand why I said that. If you don't understand it, then I try to explain it a little bit more. But 1825 is the last high volume node price or our last price when it comes down to high volume nodes that we can be able to break out of and then start to see a major push. To truly know that it's going to be clear, it have to break past 1840 or 1850, but 1825 I think is the number. Okay, US yen. Let's take a look at that. Let's see what's happening with that. And then after that, kind of ran over time, so I'm gonna have to get out of here after I do this one. Um, okay, so Casey, kind of going back to what I ended up saying before, we started off this with taking a look at what's happening with the United States dollar index. We said the United States dollar index was showing signs of being bearish from a weekly perspective, but bullish from a daily perspective, and I can see the same thing on this chart. You take away everything. I'm just going to clear the screen. We can see that the market has went and kind of made that U-turn to the downside, and this is the fractal high that's kind of making a movement and showing that it possibly could have um, a smart field to the downside going this way, where the D extension could go all the way to 122. Okay. So ultimately, long term, I think that if we're looking at this, I think that the long term move would be to the downside. Now, short term, we take a look at it from a daily perspective. We can see that the daily is basically in the buy zone, which means that today might be one of those positions where it may pop up and try to push back up to 138. Well, the reason why 138 is kind of significant is because that would be the extension when it comes down to that movement, and we'll start to see a little bit of consolidation form up in those places as well. U.S. yen hasn't been the same since the beginning of the year because obviously the Japanese yen was very weak last year. So we finally ended up seeing that it kind of rallied back at the beginning of the at the beginning of the year, and slowly but surely right now is showing that we're getting close to consolidation, or that we may be in consolidation. The reason why I'm saying that we may be in consolidation is because of this. There goes the top. There goes your second hit right there. Here is your support. Support. I would expect that the market may end up falling back down to 122, which will match up with the outer trend line, and kind of go from there. Today, I wouldn't do anything though. On that one, Casey. Today, I would not do anything. Daily, it looks good if you're a scalper. If you're a scalper and you're trying to get in and you're just trying to make some movement off of that, you're trying to get all the way up to 138. I could understand that. If you're looking at this as a swing trading perspective or anything else like that, probably wouldn't pull the trigger on it. But I can see a reason for buying if you're just scalping. But that goes back to what I ended up saying before. I think that there's going to be one quick move at the beginning of the day, and then after that one quick move, then after that, I think that the market's going to slow down substantially. So I'm not in the business of being able to take low percentage trades. All right, so I'm done with that one. Um, US 30. Let's finish this off real quick. Just kind of give a brief comment to it. Market broke out of consolidation, push back up to the long term consolidation that ended up happening from the beginning of January or beginning of November. The support was at 32,500. The resistance, um, the resistance of this one long term was at 34,300. Remember, if the United States dollar is weak, then that means that indexes will be strong. That means that you should be looking at being able to buy. If that happens, the buy trade that I think will probably end up making a lot more sense if that does happen will be up to 32,750. 32,750 is 200 points. I think that may end up hitting at the beginning of the morning today. And then after that, there could be a chance that the market could get up 33,000 when it comes down to that movement. Nas 100. Nas 100 is clearly out of this first consolidation zone, and it's remember, once it breaks a resistance, it would go to the next resistance. The next resistance has been touched already, which was the top of this overall area right here. Um, it's clear to the upside. It's saying that we have strong movement to the upside. If the United States dollar is weak, then we could see that Nas 100 could make its path all the way up to 13,940 to the upside. We have a low volume node that I'm looking at right here that go to the 4 hour. Let's see if that kind of remains to be the same. Um, yeah, we got a little bit of a push that we can be able to take advantage of from 12,600 to 13,000. I think there's a good chance that the market could take advantage of this gap of space right here. So from that 12,800 to 13,080 will end up being the area where I will look at being able to make a buy. 12,013, 12,013.80, 12,013.80. So me personally, what I would be looking for is a counter trend line break counter trend line break on either the 2 hour, 2 hour to 1 hour. Well, more than likely on the 2 hour if I can be able to get it. That gives me more time to be able to go after it. Um, and then after that, look at being able to remain to be in it from there. Yeah, I like the buy trade on that one though. I don't like the setup yet. There's no setup to be able to take advantage of yet. But if you like what I end up doing, please make sure that you end up clicking on that boost button. I do appreciate everybody being able to pop in. Uh, like always, we'll do this again. We'll see if our information is correct, and we'll see how everything kind of trading out when it comes down to that. Make sure that you end up supporting what we're doing on the YouTube page when it comes down to this. Obviously, this is dual stream, so everybody can be able to see it. And make sure that you end up keeping your eyes out on the next expert advisor review that we're going to end up doing, working on that one as well. Everybody, take it easy. Like always, plan your trade, trade your plan.